It's kick-off trading for the day. From the big overnight queues on Wall Street and global markets to the buzz around corporate earnings, policy moves, as well as stock-specific action, we break it all down so you know exactly what to watch and what to keep an eye on during the day. Stay tuned as we track the Sensex, the Nifty, and the stories that will drive the market mood today. Catch us again at market closing with my colleague Sakshi Batra. We've got you covered. We also have a special treat for our viewers today. Joining us to kick off our brand new show is market maverick Samir Arora, the man behind Helios Capital. With decades of bold bets and big calls, he's built a reputation for spotting trends before they hit the headlines. Today, he's here to decode the markets and tell us what's next. Let's take a look at the top news from the world of business, markets and finance. It's a once-in-a-quarter century event at the National Stock Exchange. History in the making today as all futures and options transactions shift their expiry to Tuesday from Thursday. Analysts say that Monday and Tuesday are to be the most volatile sessions for NSE contracts. Prime Minister Narendra Modi's China visit has the expected reaction. Donald Trump, Treasury Secretary Scott Bessent, and Trump's policy hawk Peter Navarro fire fresh salvos at India. US President says US-India trade is a one-sided disaster. The US stock market remained closed on Monday on account of Labor Day. Most Asian markets are in the green, but all eyes on gold and silver as they hit yet another record high in global markets. Sentiment to be reflected in India as well. Prime Minister Narendra Modi to inaugurate the 4th edition of Semicon India just an hour from now. India to be showcased as a hub for chip design, development and manufacturing. The mega event comes even as the first Make in India chip is set to be rolled out this year. The US tightens its visa rules from today. It's the end of age-based exemptions and drop-box renewals for H-1B, F-1 and L-1 visas. Some categories of tourist visas still exempt from interviews. US State Department warns of longer wait times for appointments. Just hours after Prime Minister Narendra Modi met the Chinese, Russian and other leaders at the SCO summit in Tianjin, the Trump administration struck out at India. It started with a Truth Social post by President Donald Trump where he branded US-India trade a one-sided disaster. Just like his claims of forcing a ceasefire between India and Pakistan, here he claimed that India had offered to remove its tariffs for America but added that it was too late. US Treasury Secretary Scott Bessent, meanwhile, played both the good and bad cop. Calling India and China bad actors, he accused the two countries of fueling the Russian war machine and said that the US and Europe were making progress in cracking down on India. But he added that Trump and Prime Minister Modi shared a good relationship and the world's largest democracy and the largest economy will eventually come together. Peter Navarro also said his bit, displaying clear annoyance with the Modi Putin and Xi camaraderie in Tianjin.
It was a shame to see Modi getting in bed as the leader of the biggest democracy in the world with the two biggest authoritarian dictators in the world, in Putin and Xi Jinping. That doesn't make any sense. I'm not sure what he's thinking, particularly since India has been in a Cold War and sometimes a hot war with China for decades. Here's the problem with India. It's a two-pronged problem. There's 50% tariffs on India. 25% of them is the reciprocal tariff because of unfair trade. 25% is the fact that India is buying oil from Russia. So start with the reciprocal trade tariffs. The problem is that India literally is the Maharaja of tariffs. It has the highest tariffs of any major country in the world, and it's in denial about that. It tries to tell everybody out there that that's not true when it is demonstrably true. So they should engage with us. They haven't done that as Japan, Korea, the Philippines, Indonesia, the European Union has. They simply think they continue having their way with us. President Trump's not going to allow that.
Samir Arora joining us now. Samir, welcome to the Business Today show. And what a power-packed morning it is with, everyone still reeling from the impact of seeing the trio there at the SCO summit. Do you think there's still a chance that Trump might roll back those additional tariffs? Or should markets now just find ways to move on given his unpredictable stance?
No, first thing is that the market can move on, but the country and Prime Minister and all cannot move on in the sense that obviously we need to continue the diplomatic and other initiatives with US. It is not an either or kind of a situation. But from a stock market point of view, because things get discounted very fast, maybe we can move on. But in the end, you would like that 25% to be removed. And in return, maybe we have to do some things. Maybe there'll be new people negotiating and blaming the old people or something like that, just to sort of move on, or maybe do a few things here or there. But you can't say it's okay to be the highest tariff country in the world and it doesn't matter. It matters to the economy, it matters to jobs, it matters to wages. It may not matter literally to the stock market because of these sectors being not so much in the stock market, and in aggregate not very big, and they may find new markets, but all those things will take months and years. You can't immediately replace one market with another. And there are jobs involved in shrimp farming and carpet making and gems and jewelry, which stock market may not care, but the system has to care.
All right, Samir, I'm going to come back to you for more, but let's also take a look at what we're watching out for as we count down to market opening. We're just a few minutes away now. And remember yesterday, first of the month, so we had a whole host of those auto sales numbers come out and they were looking pretty decent. In fact, the auto pack has been trending pretty comfortably. Right now, the Nifty 50 is also indicating a marginally positive start. Asia is also in the green this morning. So we're looking at a positive start as of now in the pre-open, and the Nifty Bank is also just seeing a marginal uptick coming in there, 54,038. So that's really what the indicators coming in ahead of market open today. Whether or not we're going to see any major moves depends, of course, on some of those newsmakers. The auto index up about 0.2%. So let's see how much of a follow-on impact we have after those initial trades yesterday post good sales numbers coming in. We're also, of course, in the peak of festive season, and with gold trending at those new highs, there'll also continue to be some amount of impact coming in on jewelry stocks and so forth. Nifty Pharma was also kind of flat yesterday. Today is up just marginally in the pre-open. Overall, of course, sentiment continues to be pretty steady. As Samir also mentioned, markets kind of have factored in some of the current uncertainty, but they're waiting for some kind of fillip in order to move ahead from these levels as well. Let's take a look at some of the other stocks in news as well that we're tracking this morning as we head into pre-open. Semiconductors, of course, as Semicon India kicks off, and we were talking about that just a little earlier on. Sugar, because ethanol restriction has been lifted, that's a sentiment boost for sugar makers as well. Jewelry and gold financiers, as I mentioned, remember gold is trading at a record. That's at about $3,550 an ounce. Hindustan Zinc is in the news this morning as well. So watch out for silver-linked plays. Silver has topped $41 an ounce. That's the highest now in 14 years. So lots of buzz there when it comes to jewelry, metals, precious metals, of course. Auto, Hero Moto August sales were up 8%. That was also looking good. So two-wheelers in focus as always just before festive season as well. We had Adani Ports reporting August sales updates as well, and cargo and volumes were up about 16%. Container volumes were up 29%. So that's another stock to watch out for this morning just ahead of market opening. Bharat Electronics has secured new orders worth 644 crores. The major orders include data centers, ship fire control systems, tank navigation systems, and United Breweries. Kingfisher beer production begins at the Ilios brewery in East Godavari, and it boasts a modern, best-in-class infrastructure, increasing their capacity quite substantially. So looking to see how the markets react to that news for UB and its capex layout as well. And that also indicates, of course, rising beer demand in Andhra Pradesh. That's what the company is catering for. All right, the Nifty there for you. easy open as expected, just about a 0.2% uptick coming in on market opening. The Nifty 50 there, 24,672 is what we're trading at right now. It's steady, it's easy, no major volatility coming in at this point of time, just a flat start for the morning. Nifty Bank also completely flat right now, no major moves coming in there. Let's pull up the auto index. That's the one I want to see, whether it continues to see some amount of uptick. IT also pretty flat this morning, as you can see. At least we're not reeling from further uncertainty right now. Nifty Auto, just a marginal uptick. Maybe perhaps some of those individual stocks might continue to see a play out. Pharma's looking relatively stronger, just about a 0.3% uptick right now. Let's also pull up some individual stocks potentially and see how they're doing. But watch out for some of those auto majors, two-wheeler majors, jewelry stocks as well. There you have it. Nifty gainers this morning. We've got HDFC Life up about 1.5%, Zomato up a little over a percent, and Reliance also holding strong. So that's really what's keeping the index looking good this morning. Coal India, Hero Moto is seeing about a 0.9% uptick post those sales figures coming in. Bajaj Finance, SBI Life, and Adani Ports post the news also about a 0.5% uptick. On the downside, IT, financials, some of those oil and gas majors, just a marginal downtick, but clearly keeping the index under pressure there. Asian Paints, IndusInd Bank, and M&M pulling up a little bit more of that list as well. So that's the market open for you this morning. Advanced decline ratio, from the looks of it, also is seeming fairly even-steven right now, but just neutral gains and losses, nothing too extreme on either side at the moment. Let's also pull up some of the other newsmakers as we go along. But in the meanwhile, let me go back across to Samir as well to get a sense of some of those other major factors that could be affecting the markets moving forward. Samir, let's take a look at what we're watching out for next. And you mentioned that markets have to move on from this. So if we were to really look at perhaps what the markets could potentially offer investors going forward. We've seen massive FI outflows. We've seen a shift towards China as well. There has been some amount of, a slight shift, in terms of sentiment towards India currently, given all the uncertainty around tariffs. Going forward, do you think that, we're seeing more than just a structural pullback, or do you see India continuing to sort of make a comeback, when it comes to markets and the kind of returns that investors can look forward to?
So first of all, prior to this July-August thing, where obviously whatever we may say that it has limited impact, but it did have an impact, the fact that we were singled out. But prior to that, from Feb end to now, the flows into India were positive. And in July-August, this should not be viewed as a big call on India, but a natural reaction to the fact that the results were sort of okay, or so. And then you had this big negative, but there is a structural thing, which is that the world is reducing its allocation to US. Now, currently in the world, the US is about 65%, 67% of the world index. And you can see it in flows into non-US ETFs and to emerging markets, that flows are increasing. Maybe it reduces 2-3% in US, 3-4%, 2-3% kind of thing. But that on a 30-35% base means 7-8-10% increase. Now, in that, normally India would also have a case to get some flows. But because this negative came out, so there will be some selling, whether we like it or not. But I don't think that beyond a point, that trend of investors, US and non-US, reducing a little bit of their exposure to US, which results in a meaningful difference for the rest of the world going away. So I still think that in the end, FIIs will invest into India. Also, one more thing is that when we see today the flows that are negative, please note that on the negative side are a lot of PE investors who, some of them who come in as FDI and get classified as FDI, and some of them come in as FII or FPI. And that money leaving or selling is not a view on India relative to China or India relative to emerging markets, but in itself a view that those guys put money in 10 companies, 2 of them have gone public, 8 of them, 3 of them will maybe go public later, and 5 of them, they will lose money or go to zero. So when these companies go public, naturally the guys who've been around for 4-5 years in those companies will sell. So what I mean is FII outflow is not 100% a view on India versus some other market. The regular FII who was investing in emerging markets in Asia, he is not, according to me, that negative. And actually, they were positive till July beginning. And then this event and the fact that the results were not so great has led to it. These things will correct with time, and this any more surprise hopefully will be positive to no surprise or no change. So therefore, I still feel quite okay with the fact if the world goes up and if China goes up. So there's one more quickly. Previously, we used to say that Indian market is trading at a big premium to emerging markets, and that was one story that Indian premium is too high. Now, in last 1 year, China is up maybe 40% or something, and all these other markets are up, and India is flat to down. So even that argument has gone away. We just have to have a little bit of a turn in the sentiment and a little bit of these interest rate cuts and liquidity injection and GST cuts, something leading to and maybe festive season or good monsoons or
Exactly.
something, plus minus a few months, I think we will be in position to ask for our fair share from FIIs.
Fair enough. Samir, I think we're all watching out for some of those positive surprises or triggers. Let's take a look at some of the other newsmakers just to touch base on the markets and see where we're at right now. Not really seeing too much support from the banking pack right now. That's continuing to trend lower, of course, today. Let's see, we've got UPL in the news, of course, some fresh cash infusion coming in for the company. That one continues to be in focus. Actually, they've acquired 49% stake in Thailand's Grow Chemical, and they've also shared a subscription agreement for a 49% stake investment there. So that's UPL for you. No reaction on the stock this morning. NMDC as well, that's continued to be in the news. Let's pull that up just on production numbers. We've seen almost a 10% rise in August iron ore production. NMDC is reacting to that, up about 0.5% there. Let's also pull up some brokerage reports and see what perhaps they're making of those current newsmakers right now. Coal India, incidentally, along with NMDC, is also seeing a strong production numbers coming in. So that one's also trending, should be trending a little higher this morning. Let's see. Yes, just about 0.5% or so there. And in real estate, we've got Puravankara in the news. They've signed some redevelopment rights in Mumbai's premium Malabar Hill area. So that's the news there for Puravankara. And it's a significant portion there for market sale with a gross development value of 2,700 crores, helping it really strengthen its stand in the luxury real estate segment. So that's the other newsmaker, and that's why it's up over 3% this morning. So good, strong move, and an indicator once again of the kind of traction we're actually seeing in real estate, particularly luxury real estate across the markets as well. So those are some of the newsmakers for you, and Nifty Realty also today is looking pretty decent this morning and continues to be actually one of the picks right now in the markets. All right, let me go back across to Samir now as well and continue to get some of his reactions on some of the major market moving things that have been happening recently. Samir, with the GST Council also meeting now this week, possibly tomorrow is when they're kicking off, they're looking at those slab cuts. How crucial is this going to be in terms of some being a positive trigger like you just mentioned? Which sectors stand to gain the most? How big could be the disappointment if the changes are not as anticipated, as clear, as simple as just removing and simplifying those slabs?
So the disappointment will be if they try to be over analytical and what we say, below 2,500 rupee shoes here and above 2,500 rupee shoes in a different category, or some shirts below X amount. Don't be over precise about these things. It won't matter, but lead to a sort of a souring of the excitement that we may have with this. So in this, my feeling is that any tax deduction is good or any GST cut is good, because money in the hand of the public is better than money in the hand of governments. And as long as on the net basis there is a big this thing, but also not to draw sharp distinctions within the same category that below a certain amount is middle class and above that is the super rich. All that is spoiling the mood if it happens. Hopefully not.
All right, Samir, coming back to you in a moment. Let's take a look at some brokerage reports as well. We've got Motilal Oswal on Phoenix Mills, upgrading it to a buy with target of 2044 with the commissioning of new malls to drive growth. So there you go, again, a realty play coming in there. Nomura on Asian Paints, maintaining a buy rating. That's at 2935, with an 18 to 20% EBITDA margin, with demand stabilizing and gradual revival also likely. So that's positive on Asian Paints, which is always a market darling as well. CLSA on quick commerce. Blinkit continues its rapid store expansion, and the other two leaders, Swiggy and Zepto, have also consolidated positions. So profitability is expected to improve across all players. That's the take coming in from CLSA this morning as well. And talking about consumption, I actually want to go back across to Samir, because this is a space that he tracks very closely. On those consumption names particularly, Samir, do you feel that India's story continues to remain strong despite, what uncertainty we may see on earnings or due to some of those geopolitical factors recently? But when it comes to the demand scenario, when it comes to the kind of potential returns we see, particularly in the broader retail play, what's your stand?
So in general, there are three big themes in any market. That has been forever, which is financials, consumer, and IT. And a consumer has been slow for a number of years, but also not only because of maybe lower income growth or lower new jobs or good jobs, because IT sector being a big employer has not increased jobs, although the losses on one hand may have been compensated by these global capability centers that have been set up, but still not the kind of growth that we had in the past. But the other reasons for the listed large consumer stocks not doing well is because there is competition from unlisted companies, from private companies, where each niche, somebody's developing healthy food, somebody's developing different kind of cosmetics or shampoos or whatever. And also because of the advent of quick commerce, the one big strength of these consumer companies was that they had big distribution. And now that distribution has been disrupted, because if you just start a brand, have some money, spend some money, you can try and distribute it through these quick commerce and e-commerce companies. So that's why we don't like the old traditional consumer companies. And also we think that the basket where the consumer spends has changed. So if today monsoon, in the olden days when monsoon would come, everybody would go and buy a Hindustan Lever stock. Now the money, if saved via GST or because of higher income, better monsoons, whatever, may be spent on things which you can show on Instagram, and things that you may spend on data, or you may spend on travel or other things which are now the new areas where people want to spend money. Or you might order a few more times at home food, which we will support.
Okay, Samir, with Q1 FY26 GDP at 7.8%, which was fantastic, in India's first sovereign rating upgrade in 18 years, can regular investors still expect double-digit returns ahead? That's the big question. Everyone's wondering whether they should be moderating their expectations given the current mix of factors, or will India continue to outperform?
So 10% type return outlook is absolutely reasonable. It should be a little better, because big picture nominal growth, although this quarter the nominal growth was very low, but normally you would think that the GDP growth is 7-ish%, and there is 4-5% type, 4% type inflation. So you have 11, 12%, 10, 11% nominal growth. But the way to look at it is that on a relative to what are the other choices, the other choice with which equity is compared is fixed income or debt. The thumb rule is that you make 5-6% more than what you can make in debt. And debt is viewed as 10-year government bond. So this data is widely available for all countries around the world for the number of years that their stock market has been in existence, which in many cases is 100 years and more. The thumb rule is that you will make 5-6%, and this is consistent across markets and across slightly longer periods, because it's not literally every year that you will make 5% more, but on any 5-10 year type period, it does end up being that. So in India, previously the government bond used to be 9%, and the market used to say and actually deliver on an index level 14-13% type of returns, and it was consistent, and also it was consistent with the GDP growth being 7.5, inflation being 5-6%, 13%. So you say, the private sector will do better and the listed guys will do better, and therefore the market used to that. Now inflation is low. Why is it low? Because activity is low, because growth is low, and therefore interest rate is low, and therefore the returns will also be low. But you have to look at the spread. And the spread of 5-6% is reasonable. Therefore, 10% plus is very reasonable. Over long periods, annualized.
Fantastic. Samir, thanks so much for joining us this morning. Always great speaking with you, and good to hear that things are only going to get better from here. Okay, back to markets now and take a look at some of the other buzzing sectors. And Nifty is climbing higher just a touch. It's still about 0.2% right now, but certain pockets are looking good. Let's take a look at sugar stocks as well. Pull those up for you. In fact, we're seeing quite a bit of a surge there on the sugar stocks because the government has removed curbs on ethanol production from sugarcane and sugar syrup. So whether it's Balrampur, Bajaj Hindustan, Sri Renuka, you've got Dalmia on your screen. Look at the spike on all those names. We've got all of those sugar stocks, in fact, across the board. Dhampur is up 12% right now, and a whole host of them. KM Sugar Mills up about 7-8% there. Sri Renuka will pull up as well for you, and some of the others. But all of them across the board are seeing a good steady spike coming in. So that's the state on sugar at this point of time. There you go on your screen, and pretty decent volumes coming in there as well. So that's one pocket of the market that's buzzing. We are also seeing some other gainers in the broader market. So you've got a Triveni Engineering up about 5% there. We've got Sterlite Tech that's looking good. Uflex is up about 4% right now. Green Panel India also. We've got the Nifty just steady, of course, but all the action seems to be in the broader markets this morning. I'm just curious to see some of those jewelry stocks, if we can pull them up. Maybe some of the financiers, or let's pull up a Manappuram and just see if there is any impact, given that we're seeing that huge spike on gold, and of course in the midst of festive season as well. Let's pull that up for you in a moment. Not too much action this morning. Kalyan is just down about 0.5% or so, and we'll pull up some of the others to see if there's any traction there. Titan also just flat. So let's see how some of these play out over the next few weeks, and really how they benefit. Everyone's waiting to see the kind of traction that comes on the back of festive season, as well as, of course, any fillip from those GST slab revisions as well. I would like to also pull up auto, yes, because again, not just sales numbers during festive season, and of course post all the monsoon action, usually we see a demand uptick here. But right now, looking overall, the index is up about 1%, but individual stocks, no major moves coming in as of now. Let's leave it there for now this morning. We'll continue to, of course, track the market action for you through the day. Thanks so much for joining us, and we look forward to seeing you back here tomorrow, same time.
Moto G96 5G. All eyes on you.
I choose a world where we dream, and the limit is the sky. And this world is my home, where I'm living my best.
Mindfully crafted home decor fabrics. Sansar, a D-Decor brand. Live consciously.